Morning, and here are your top 5 stocks to watch out for in trade. Well, let's begin with some earnings reactions. And you had LIC Housing Finance, the mortgage lender that put out its numbers post-market hours, well, a 34% jump in its net profit to come in at 817 crores, and that was largely helped by lower provisioning. You also had the last year's PAT, which stood at about 610 crore rupees. Meantime, they also said that they're fully provided for what is required this quarter. The provisioning stood at about 56 crores compared to about 253 crores on a year-on-year basis. The total income was healthy at 4,977 crore rupees versus a number of 4,807 crores. NII grew to about 1,220 crores versus 1,181 crores, and the net interest margins as well were healthy at 2.32 versus 2.4%. Moving on then, let's focus in on SBI, and Goldman Sachs has upgraded the stock to a buy, the second upgrade coming in, with a target price at 282 rupees. They say that SBI is a proxy on easing financial conditions. It has one of the highest provisions on the total stressed book, and they've gone ahead and raised their EPS estimates following the Q1 earnings. Goldman Sachs also believes that the valuation makes it an attractive entry point. Moving on then to IRB Infrastructure, a loss of 30 crores versus a profit of 206 crores last year. The EBITDA came in lower at 477 crores versus 855, and revenues at about 1,022 crores versus 1,773 crores. Well, CLSA has maintained a buy rating on IRB Infrastructure with a target price at 166 rupees. They say that the awards are picking up and they believe the best is yet to come. In fact, CLSA says that the construction backlog is up about 23% on a sequential basis, and that the traffic as well is recovering quite fast. The stock offers a value of about 8 times the FY22 price to equity, and the COVID hit, it has been a COVID hit quarter, but they see traffic recovery of nearly 78% in June. Moving on then, Max Financial is as well in focus now. You've got Axis Bank proposing to acquire nearly 17% equity share capital in the company, which is going to result in a total ownership of nearly 18% post this transaction. This is subject, of course, to regulatory approvals. CLSA has upgraded Max Financial to buy with a target at 720, saying that the revised deal structure is one step closer to the deal. And from Axis Bank's perspective, the stake is lower, but Axis remains in control. Fundamentally, they say that Max Financial has improved their premium mix. And Pheonix Mills, on sources, ET now has accessed the term sheet of the sale of shares by the promoter group entities. This is with respect to the QIP. And we understand via sources that 2 promoter entities are likely to sell stake in the company. That's Radhakrishnan Ram Narayan Private and Senior Advisory Services Private. The deal size is pegged at around 665 crore rupees. With an upside option of 831 crores. The base deal size is at about 5.8% of the total shareholding, with a upsize of 7.3%, and the floor price, we understand, is at 665 a share.